and then we're away. Magnus Heystek, it's such a joy to talk to you every Wednesday, because no doubt you've got something that is buzzing around your head that you want to share with thousands of people who follow you on the BizNews community and elsewhere. I just have you know, Magnus, this is our very first Facebook Live interview. We're going out on YouTube, but also on Facebook today. So making a little bit of history, pushing the envelope, pushing the boundaries. And what better subject than the folly of forecasting to talk about today. Just by way of background, I met Nassim Taleb, the author of Fooled by Randomness, in the mid-2000s at a hedge fund conference that we were both at, where he had quite a lot of time at the conference. And he goes on, he banged on about it time and time again, about how if you want to make a fool of yourself, try and forecast something. And it's certainly in your line of work as a financial advisor, it's got to be something that is close to your heart as well.
Good afternoon, Alec, and good luck. You should have warned me. I would have worn a tie for the occasion, but like you, I can't find any ties in my cupboard anymore.
Thank goodness. We have moved on. We aren't the old pinstripe brigade that we once were many years ago. Forecasting.
You know, we've both been in the investment industry for a long time, Alec. Our bull dust barometers is very well developed. You know, you kind of get used to all the forecasts and the claims and all the fantastic things that are going to happen. So that's a starting point for me, at least, when I look at any kind of forecast about any kind of investment product. I kind of cynically read through the documents, and that, for instance, was one of the reasons I picked up the ShareNet thing. They were going around the country and they were promising fantastic returns. But you all had to do ShareMax, I beg your pardon, ShareMax. Mm-hmm. And the same with PIC and LeaderGuard, and you just have to read through the marketing bump. But in the last couple of years, I've noticed that our established large asset managers have kind of, because of the tough conditions and the weak performance, they've been venturing, if I might call it that, into the area of very bullish forecasts from time to time, which inevitably, in the South African context, has not come true. And my question, is that fair to the average investor who sits and reads or listens to a radio show and reads a headline of an article and makes their investment decisions based on that extremely bullish forecast? And it really gets me, it irritates me endlessly when I see these incredibly bullish forecasts, but there's no comeback when these people get it wrong.
That's a big point. I remember talking to a very senior public relations guy some years ago, and he said to me, I'm going to stop recommending that your clients come on to your radio show. And I said, but why? He said, because you always ask them about what they said to you last time. So if they come on for financial results, a year later, I would do my research and have a look at, because of transcriptions, what they had said a year ago and say to them, okay, so what about X, Y, Z? And he was very offended that I would have taken that line with them, i.e. they can bull dust us as much as they like, because no one's going to hold them to account. And perhaps that's our deficiency in the media, that we don't hold people to account for the projections and the promises that they made in the past.
You know, in the United States, they've got various websites and organizations that simply track the forecasts of fund managers and analysts. I think the Halbert Digest is one of the most prominent ones. And they hold these guys to account, and they come on and they say, you, Mr. Joseph, said this the following, but this is what happened. What went wrong? So guys are very reluctant to stick out their neck, but we don't have that mechanism in South Africa. And, you know, it's in that context that I sent you some of the forecasts that I keep, which strike me. I mean, the one was by Al Mutual, one of our largest asset managers 3 years ago. And they went on radio, they went on roadshows, and they went to all the advisors, brokers, and saying the JSE will be the best investment over the next 5 years. I heard that on radio. The print article that I sent you, which was in Business Day, reflected that they said it'll beat the average of the world market. But it was so filled with marketing bump and assumptions, and I did the follow-up today, and I said, let me go and check what happened in the last 3 years with regards to that forecast. And by and behold, the JSE in the last 3 years has been a disaster. And had you invested money in one of those old mutual funds, and particularly their largest equity flexible fund, the Old Mutual Investors Fund, you've made no money, not a cent. But nobody comes back and questions them because they're scared of the advertising revenue that will be yanked, and that PR guy who will call them and saying, that's not what we want to hear on the radio. But my question always is, what about that average investor desperately trying to build some retirement capital? And the fund that they're in is totally deficient, very expensive. The fund manager has made more money than those people in those funds. And this needs to be spoken about. At least have the integrity. I'm just talking in general, the media. Get that fund manager back on and say, listen, okay, you said this is what happened. Let's hear your side of the story.
But often the fund manager is unavailable for that conversation. And I'm talking more about JSE listed companies. If you don't toe the line, if they don't like you, if you don't jolly in the media engagements, well, you don't get invited back. I guess it's a little bit like what happens with the White House press corps. If they rubbed Donald Trump up the wrong way, well, they were ejected from doing their job in essence. But getting back to Nassim Taleb, and this was a very good point that he made in his very first book, Fooled by Randomness. He said, if you take 100,000 people and you ask them to toss a coin, after one toss, 50,000 will be left. After 2 tosses, 25,000 will be left. After 3 tosses, 12,500 will be left. This is when you only keep those who are tossing heads. So the guy who's tossed 4 heads in a row then stays in the stadium, as it were. If he gets to 8 or 9 heads in a row, suddenly he thinks that he is the world's best coin tosser, i.e., it's very random in the person who becomes one of those few who remain in the stadium after however many it is when you get down to the last 20. And he makes the point that in investing, some people are going to get dead lucky as well. They're going to invest in the right shares. They're going to do fine, but they cannot believe that cannot sell on the basis that they're going to repeat that into the future. And that really is my question to you. Clearly with Old Mutual 3 years ago, they were making these projections. Some poor fools followed them and put their money with Old Mutual and then are ruining that day. But what about those looking into the future? How do you choose which asset managers are going to be likely to perform?
It's a complicated exercise than simply answering this method or that method. And it's a whole process where you start with the macro analysis, you look at the macro trends, you look at past performance of fund managers, you look at past phases of the economic cycle, and that still doesn't answer the question, or it still won't guarantee that you're going to select the best fund manager, but you at least have a far more scientific approach. You're taking the guesswork and the bull dust out of it, and you build a diversified portfolio based on verifiable facts, not let's just call heads for the next 5 times. You cannot invest on that basis. So, there's much more to it, and it's just immensely annoying. And then the last point, like earlier this year, for a very brief period, the JSE, because of the commodity lift it had and the platinum shares running, I think for about 2 or 3 weeks, was the top performing market in the world based on that criteria. But since then, and then it was just followed by news report after news report about, and again, Old Mutual was guilty of that, saying, well, this is the start of a new bull phase, and now's the time to get in, and don't wait. And boom, I had a look once again. That rally has petered out. The JSE year to date is again flat. You've made no money, but midway in April, you would put all your money on the JSE based on the recommendations of these fund managers who are quoted extensively in the press.
On a coin toss, in a way, because I suppose that famous saying that even a broken watch is right twice a day. But from your perspective, you were attacked then, if I remember correctly. There was at least one very high-profile article which said, "Oh well, Magnus Heystek doesn't really know what he's talking about because the JSE is outperformed." It is, I suppose, satisfying now to see that these very short-term triggers are often pulling in useful idiots who have got an agenda that they want to, or a drum that they want to beat.
Yes, it's part of the game. It's a game. It's not a gentleman's game, and that was very disappointing from that particular columnist, who I found out subsequently actually is a consultant to the JSE, and it was never declared in his articles. And so he has an extra grind on behalf of his client, which I think he should publish. One of my clients is the JSE, so there you already have something that stirs. And subsequently, he's been 100% wrong. And as I'll show at the conference next week, your offshore returns versus local returns, I'm talking about the equity markets, have been night and day. I mean, it'd be life-changing, the difference in returns. And all I'm asking for is a little bit of fairness from particularly certain media sections, and just publish the facts, let people make up their own minds. But even that gets blocked, because I wrote a rebuttal to that article to the editor of the Business Day, and he didn't want to publish it. So it's a little bit, I was kind of set up, had a go at me, but I had no chance to defend myself. But subsequently, the difference between offshore and local has again widened fairly dramatically, and in fact spectacularly so in the last 3 months. So anybody listened to that article has made no money, and the guys who went offshore have made 20%. That's just what happened in the markets.
You spoke about a bull dust detector early on. For those who haven't had that experience, maybe young investors coming into the market, what can they put onto their watch list to make sure that they don't get sucked up by the marketing hype?
Yeah, it's so easy to convince people just by making a couple of statements. But when you start digging a little bit deeper, first of all, you've got to question the claims that are made. Secondly, who is making? Is that person connected or not connected, or will they be benefiting from that particular claim? And if you go through a little checklist, eventually you start asking questions. What kind of investment is it? Where is it held? Who are the custodians? Who determines the returns? What are the liquidity factors? These are very logical questions that people should ask, but they don't. And in all due respect, a lot of people just don't have the knowledge, and they trust. That's the basis of fraud. People trust other people. They don't want to believe that this nice-looking guy across the desk from me is potentially a crook who will steal my family's money. That is the basis of all frauds. It's misaligned trust by the investor. They simply just don't believe. I had it when I interviewed a lot of people lost their money in the Shemex scam. And I said, Wim or Danny, because predominantly the Afrikaans community, why did you give your money to this guy? And they would say, he was such an honest-looking man, and we knew the parents from school, or we went to the same church. They simply didn't believe that someone had it in them to look you in the eye, give you a firm handshake, and then steal your money. That's where it starts. And that's why it's so important when you make these investment decisions, get the most cynical advisor to come and go through those documents. And I picked something yesterday, I might discuss it with you later. An investment scheme that just blows me out of the water. It is, I'm not going to waste your time, but ask questions. And if you do not be a cheapskate when it comes to making these big decisions, even it costs you a couple of $1,000, go to someone and says, just have a look at this for me and give me your professional opinion. You're not going to make money out of this deal. Just give me your opinion. In most cases, you will walk away from those deals.
Yeah, it is very strange that we will do enormous due diligence on our future partners, on owning or the home that we own, but quite often in making an investment of which is even more long term, like a retirement investment or savings to look after yourself in your twilight years, that the due diligence is not done as aggressively there. But it's a funny thing that you mentioned, Magnus. If somebody looks you in the eye and gives you a firm handshake, then they're telling the truth. So I guess that's the way we always used to believe the body language. But the shysters have learned that, and I'm sure they're pretty well practiced at it. So even that is not a guarantee nowadays of honesty.
It's not. That I think that's lesson 101 in the shyster school is look him in the face first. And all that, because that's how you break down barriers between people. Money is very seriously, and very briefly, I must tell you, about 20 years ago, I was still writing a column for Rapport, and someone phoned me about this investment scheme in the Wild Triangle, the MP Finance, where they were collecting all the money from the people, the pensioners from ISCO. It turned into, they renamed it Creon. You might remember the Creon story.
Yes.
So I got hold of the lady running the scheme, Mariki Prinsloo. I spent an hour or two, send me your documents, and I went through the questions. And I wrote an article in Rapport saying, this is a scam, stay away from, and don't touch it. So Monday morning, I came to my office, my secretary said to me, you won't believe how the phones are ringing. And I thought, people must be phoning me to thank me for the article that I wrote. I was wrong. They phoned me to attack me, to saying, you idiot, how dare you blow the whistle on the scheme? We're making so much money. You're just jealous and you don't understand it. And they went on and on and on. And of course, 2 weeks later, the Reserve Bank stepped in. They closed it, 600 million rand gone. And we had the same replay with the Shemax story, where we almost had a fisticuffs in the old MoneyWeb studio with the Shemax people. They actually wanted to hit me with old Andries when we said, I said, don't touch it. I will not put my money into the scheme. It doesn't answer the questions that you need to ask. I thought this guy was going to hit me. He was so cross. and so, that bull dust antenna has been developed very well over time. And I'm not saying these local fund managers are talking bull dust, but some of their marketing is in this current climate, considering the situation where we are as an economy with unemployment at 35%, no growth, unrest. And I keep on telling how wonderful the outlook is, and it just doesn't gel with the reality on the ground. And they must just tone it down. Just be a little bit more humble.
Yeah, and if you see somebody making these kind of statements about the future, what was it that Yogi Berra, the very famous American baseballer and baseball coach, said? Forecasting is difficult, especially when it's about the future. When you see anything like that coming out of the financial services industry, just beware, because you'll probably find that it is the marketing team that's driving that message rather than the investment guys.
Yeah, and it's and the last point, very few media outlets are still prepared to stick out their necks, and that, of course, includes BizNews. But most of the mainstream media are too scared to attack their big advertisers. I've tried. I've sent them articles. They just rejected. No, too negative, not interested. But the reality on the ground is that the JSE has not been a great place for the last 10 years, and the last 5 years, and the last 3 years. Those are not my opinions. Those are facts. And finally, we have such a wide range of investment options in the world. You've shown it with your share portfolio, your global portfolio, what you can do by just thinking a little bit broadly. And I always think about the outcomes for ordinary investors trying to build some kind of capital. What does it mean for them, for their families, their children, if their investments have delivered a very nice performance over a period of time. And again, I'm sticking out my neck, considering the current situation. I just don't see it happening in South Africa, and it's going to be somewhere else.
Magnus, thank you as always for your contribution here. And I suppose the final thought there is just remember who it is that the person that you're listening to is serving. In too many instances, it's not who you think it is. If they have other vested interests that are going on, well, or other incentives rather than serving the community or the person who's in the end of the day really paying them, but is maybe a faceless member of the public, then just beware. Good talking with you as always. Magnus Heystek from Brenthurst Wealth.